down in the lobby and had breakfast, coffee, dusted off the charts. Here we are. Herbert, good morning. Thanks for being here. Thomas, good morning. Appreciate you being here. Looks like the YouTube folks are live now. Good morning, YouTube folks. Thanks for the thumbs up. We got 5 thumbs up already. Sweet. We actually have a couple of units in here. One at the 38.2%, micros, trying to pick one up, trying to pick up a second unit at the point of control right now. That's what's going on here. We'll do the introduction in a second. Hey, Chris. Good to see you. We got one long position right now. Hunter, is Hunter's birthday today. Happy birthday, Hunter. Hope you have a great day for sure. Griffin's long, my 90 long on the open lost 5 points so fast it wasn't funny. Yeah, we did have a couple of candles that were a little bizarre. Good morning, Lewis. You didn't miss anything. We haven't even started yet. We have a few more minutes before we officially start. So you did not miss anything. I did try to get, I just got one position. 1 unit in the micros at the 38.2% retracement level, around 84.5. That's what we're trading right now. I have a second unit I'm trying to acquire. Acquire is a fancy word for purchase or buy or go long at the point of control, a little bit south there, 81.75. Jamie, good morning. Griffin says the short at 89.50 made 10 points. The second short at 89.50 broke even. I'm going nowhere fast. It's okay. You got a lot of time left in front of you. Time is on your side. Ben says, good morning. Got 2 long red so far, MES. Lewis says, really like a NinjaTrader, I must say. Thumbs up to that one. I like it too. It's a serendipitous like. Well, before we get started, even I do have to put a profit target in for this first unit. I'm going to pick this 61.8% level for the moment. But we have a long way to go before I feel like we're range bound today. I think we have only a 30. If you include these wicks up here, which you probably should, a 35 handle range so far today. Which, compared to the last few days is small, even though it's not small. In any event, I just simply used the fib for the first unit. That's all I did. We're going to get started in 1 minute. We'll get the official introduction going. Now, the bottom of my fib came from this candle right here. So the 930 to 940 candle right on the cash open. The low on the cash open candle was the low of my fib. The high was this crazy wick we have up here at 650 to 7. And I'm a fan of these wicks getting attacked later on in the day. So we'll see what happens with that. Bando, hi, how are you? Thanks for coming. Terrence, welcome from Seattle. Yeah, my gut feeling is we're kind of going to settle down here. The volume's a little more reasonable, 472,000. Don't forget it's rollover here. So I'm in the December contract. I'll talk about that in a second. Let's get started here. Good morning. My name is Jim Cagnina with NinjaTrader. I'm the Senior Education and Training Specialist for the NinjaTrader platform. Thanks for being here with me today as we go through this Tuesday, Wednesday, Thursday exploration of trade setups in the E-mini S&P 500 market, and maybe we'll take a look at some other markets. I do want to remind everybody trading futures options on futures involves substantial risk of loss. That's suitable for all traders and investors. Oftentimes in futures trading, you have this high combination of leverage and volatility, which is an equation for opportunity, also an equation for risk. So be careful. Only fund your future trading account with risk capital. My personal definition, money I could afford to lose, doesn't change my lifestyle, doesn't lengthen my retirement horizon, doesn't overly anger Mrs. Caggs. That third part's a little tongue-in-cheek. Keep in mind, stress in life matters. We tend to make bad decisions when we're under stress. So be easy gentle with the day trade margins. There's plenty of leverage in the futures markets as it is, and be patient. We are logged into my simulated live account with a real-time data feed on the NinjaTrader platform. And right now we have a 1 unit long position in the micro ES at 84.5. You can see by that label here on my chart, and you could also, I'll freeze the actual Superdome here, and you can see it in this shaded here, brown shaded price, 84.50. I'll release the dome, and that's where we're at right now. I'm trying to pick up a second unit a little bit further south, right at the bottom of the value area, above the 23.6. If you were more conservative, maybe you would try to be more patient and wait to get down to the 23.6. If not, leave it where it is, and we'll see what happens. My stop is at the lows. In my rectangle here, I drew a rectangle where we had an area of what I would consider support, and that's where we're at right now. Harold, good morning. Jeffrey, good morning. We had a great, what a week. What a week. Not a lot of economic releases, not a lot coming today. While this trade idea is percolating right here, let's just take a peek. You know, MBA mortgage applications is really all I had on my radar screen today. And, you know, take it for what it's worth. It doesn't even muster a green, a green dot or a red dot on Econo Day. So, but it's something that I like to look at. Actual was 2%. The housing boom here in Charlotte is a housing boom. It's just incredible. Properties are selling in 1 day still. It's amazing. In any event, this small city is becoming a larger city, which is okay, I guess. I'm from Chicago, so I'm used to it. In any event, petroleum status report later on today, and then JOLTS, Bureau of Labor Statistics at 10. I have that backward. 10 o'clock should be before it. So it came out just now. I don't know what the results were because I'm not looking. Notable, no Fed people running around saying stuff today that I could, as far as I could tell. Build back better is off track. Probably won't happen until next year. But on track is a debt limit problem. I think they've come up with some, between the House and the Senate, some political maneuvers which should enable this to be a nothing burger. These earnings are from previous days. Forget about those earnings. Did not update that, and that's all we got. Real simple, real light day today. Another reason why I think maybe we're going to be range bound today. My bias is still pretty bullish. I just want to kind of show you my long-term chart here I was making. You know, I'm thinking about these giant average daily ranges we're having with these candles being so big. You know, Omicron fear. It's Omicron Friday is the first that I'm going to call it. Is this a red bar right here? This big price depreciation. We tried to fight back the next day, but then no, sellers came in, continuous selling. And, you know, at this point in time, in my opinion, there was a phenomenon, a belief perseverance was kind of big in the idea that this equity market is so overbought. It's time for a crash. It's time for this thing to break down. And for those folks who held on to that belief perseverance, that failed, right? Because now, you know, buyers came back in. This was completely an Omicron fear based move, in my opinion, as opposed to a Fed tapering or Fed interest rate. I think the market's kind of has absorbed that kind of Fed talk into it already. So I believe that's what it was. And, you know, sure enough, for the bears, they got whacked. You know, we've made up ground and then some, right? We're back into my cloud here. This is my area of resistance here. We peeked our head in it again, and I'm not surprised if we're not going to go ahead and plow through it by the time we reach 2022. So anyway, that's I don't know, for fun. Thought I'd show that. I was looking at the March chart on my daily. It's going to be the same pattern as it is on the December chart, and we're trading December contracts. That's where the volume is. Take a look at my quote board. MES 352,000 is traded so far. MES in the March, the 322, only 15,000. These numbers are going to start to converge and diverge and change and switch, and we're going to get more volume here in the March. But until that happens, we're sticking with the December. It's more liquid, better bid-ask spreads, and all that stuff. From Facebook, Rodrigo, hello, good morning. Thanks for being here with us. I don't know if it's your morning or not, but it's good, whatever it is. Good afternoon, good morning, good evening. Thanks for coming. Chris says, funny, my MES 1221 wick didn't go down that far. It only went to 78. That's weird. 78. 75, that'd be way up here. Let me think about why you're seeing that phenomenon. You just might need a data reset on that idea. But I'm pretty confident that my candles are looking pretty sweet right now. You know, we're approaching my target. You know, let's talk about the targets here. I kind of used I don't know if it's a random number or not, but I used this just south of the fib line, just south of the 61.8%. Level, and there's some volume up here. There's volume north of that. This is really pretty close to a normal distribution if you think about it. It really looks like a bell-shaped curve almost. It's not perfect. Point of control is still the bias of the point of control is still a little bit south, pretty much where we're at right now. But that's okay. It's okay. I'm happy with where we're at on that. Jolt, relaxation from your soul, types in YouTube. Jolt 11.03 million. Ben says build back batter. Oh my goodness. That's Doug Shannon. Good morning. So we're kind of seeing a nice little tug of war here right around. We're building up volume just right south of the point of control right now. In this area right here. And the more we do this, I think the better off we are from a normal distribution type of day. But we'll see. We're about to get my second unit. Maybe not. We'll see. Griffin says, my low since the open is 78.75. So Griffin, right where I have my right where I have my mouse, you're looking at MES? That is very odd. Let's shoot over to the ES. Okay, so this is the classic ES. And we have a similar type of pattern at the bottom here. Let me go ahead and recreate my fib line. Bear with me while I mess around with my my margins. So let's go to the fib. Let's do it. I'm going to go high to low again. High to low. Again. I'm going to put in my rectangle here. Let's go to rectangle. Why can't I find my rectangle? There we go. And I'm going to go ahead and just line it up with the body, the bottom of the bodies on there. And that's my area of support right now. We're trading right at the bottom of the value area on the classic ES. Point of control in this particular view is 88.75. Good afternoon. Well, let's stick with the ES then, if this is this is what the preference seems to be, because the low here in the ES is in fact, right there, 78.5. So we'll do that. We don't need those scrawny micros anyway. Well, here's the thing too. Since it's a smaller daily range, I feel a little bit more confident in our idea here that the big ones could be okay. And again, I'm going to go ahead and get long here. I'm going to put my stop right here at the bottom of my rectangle. If we make new lows, I'm wrong. And let me throw it in. Then we'll see where we go. From a target point of view, since we are using a classic now, remember the tick size is 10 times bigger, right? 10 times bigger. And so I would like to consider that in my trade idea. I want to duplicate my rectangle, copy, paste. I'm going to move it up here to try to identify a contemporary area of resistance. And so I'm going to kind of put my rectangle right there, and I'm going to match it up with the 940 to 950 candle. That's the highest body close in recent memory. Beast remember it's like 1, 2, 3, 4, 5, 6, 7 candles. So that's my, I don't know, short-term area resistance. So from profit target point of view, my expectation is hopefully, well, it is my expectation. I guess expectation's not hopefully, it is what it is. We pop back into that area, which is right at that 38.2%, and that would be a reasonable target in my mind. Reasonable target in my mind. So there we go. So there's the anatomy of the trade now, with the classic. Yes, and we'll see how that percolates as we go forward. Ben's voting for micros. So, I think we made that mistake last week. Remember with the with that one trade idea, things were happening so quickly that we should have probably stuck with the micros when we had that, ginormous volatility day. And now I do think things are going to settle down a little bit, though. I think things are going to start to slow down as we get into this holiday season. Short of any more dramatic anything with COVID and those type of things. Yeah, so Chris, I pivoted over to the classics now, so everyone's on the same page. My high here is 47.12 also. So we're gonna stick with the pivot. Trade idea is a little bit different now because we started it a little bit later, but it's very similar, right? The bias is bullish. We waited for our entry. We're down trading now at the bottom of the value area, which is this dark blue area here, and I have a point of control is 88.75 right now. But there's there's a couple. This is kind of a flat peak, right? So from 89, so maybe 6 ticks worth of point of control up in here, which is okay. So we're kind of driving up now. Things are looking good. Everybody's happy. Let's think about where our target is. Would I change anything right now? Probably not. Let's give this candle another 6 minutes before it completes itself. You complete me. I'm going to say that to this candle if it ends up green. You complete me. I'm dating myself. Griffin has a line around 70 on the daily support. One of those magic lines you forgot about, or is this deliberately intended for today? Just out of curiosity. Yeah, so in this particular fib line, okay, so Sada, I literally went, for when you're drawing fibs, at least the textbook says, we're going to identify a trend, and we're going to identify a swing A to B, right? And it's going to be a trend, and it's going to be in a direction. What I did in this particular case was I went from the high this morning around 6:50 to 7 o'clock, and I simply picked that high. That's my A, started my A, all the way down to B, which is the low, which happened around, on the open. This is the opening, the cash open. I'll call it the cash open. And that's where I drew the fib. I did it on the side so it doesn't get in the way of the chart. So let's just kind of pull it over here so you can see a little better. So you could adjust this simply by, you could move it wherever you want. The ratios are the same. It doesn't have to overlap the chart, I guess is what I'm trying to say. And it's not exactly perfect. It's close enough though, right? Our entries are close enough. Okay, so here we are, accumulating volume south of the point of control, which is something we want to think about. So far, our patience has paid off. Sada, hopefully that helps. Let me know. Oh, Theo's from Chicago. And perhaps I'm going to go out on a limb here and say, maybe from Greek background. Theophrastos? Did I say that right? In any event, welcome. I'm glad you're here. I've spent most of my life in Chicago. I'm down here in Charlotte, North Carolina right now. The firm says good morning. Good morning, the firm. Yeah, I do consider that, Sada. So, Sada, I consider this a 23-hour session. And, especially after midnight when we have, the Eurex exchange opens up in Frankfurt as an example. And then a couple hours after that, London, huge financial center, opens up as well. And I think that's valid and important information. But there's different types of institutional entities, trading entities that are expressing their opinion on this market for the day. And I think all of that data is kind of important. Obviously, it's at nighttime in the U.S. The volume is a lot less a lot of times, but I think these markets are all interwoven. So I will use the evening, especially early morning fib highs and lows to tell me where to put fibs. I think it's important. I think it's valid. This is no longer a Chicago market or a New York market. This is a global marketplace. Yeah, and Ben, so I don't care. The 9:30 open to me is irrelevant when I'm drawing. I guess the way to say it is the 9:30 open is irrelevant to me when I'm drawing a fib, right? I just don't think it's I just don't think it's relevant. And again, especially pre-market, you had remember 8:30 or 7:30 Chicago time. You have a lot of economic releases that come out as an example, right? And those could certainly drive the direction of the market, at least short term, at that point. And then before that, you got pre-market, you got the bond market opening up, and all of those factors that are influencing price. Well, John asks a great question. John says, where do we find a list of which markets open at what times? Most of the CME group markets, the futures group markets, are 23-hour markets. In other words, they'll open up at 6 p.m. East Coast time, go all night, all morning, all day until 5 o'clock in the afternoon. And then they'll be closed for an hour, and that cycle repeats. That cycle starts Sunday, and it ends on Friday. So on Saturday, you could take the day off. Herbert types in cmegroup.com. But most of these ones that we're looking at, and I'll go over the asset classes on the right-hand side here, and we have the stock index futures at the top, the micro stock index futures underneath it, then the currency futures, again, 23-hour marketplace underneath that, micro currencies or Forex, if you want to call it Forex. And energies, I have a few of them up there. There's more than just these ones, but there's crude oil, natural gas I'm keeping track of. Again, 23 hours, metals, gold, silver, copper, and then interest rates. The whole entire yield curve is represented here in the interest rate complex. 23-hour marketplace. Cryptos, they're in their infancy now. They're getting started. They got a long way to go before they have the amount of liquidity that we need to really get into it. And then grains, they have a little bit of an odd time when you trade grains. So that's the outliers, the grains: corn, oats, wheat, soybean oil, that kind of thing. So we are seeing right now we have about 500,000 contracts traded in the December classic, and we have some volatility. I mean, we're having 2 to 3 handle moves just a blink of my eye right now. So we're going to keep our eye on it. But right now everything's looking good. I kind of like where we're at. I probably wouldn't move my stop just yet. We just got this new candle though. Let's see what happens with it. So market analyzer. So keep in mind when you add a market analyzer, right? When you go to new and you add a market analyzer, the best thing to do is when you get it going, just right click in the market analyzer and you could add instruments. You could create blank rows, label rows, columns, I'll just give you a sense of what columns are available. All of these columns are available. I have not added really most of these to my market analyzer. I'm just kind of using mine as a quote board because it fits nicely during the presentation. But in any event, right click on that and you could customize it however you want. So I recommend you just experiment with that, and you could make it unique to your desktop and to your needs. So Harold says, if you don't mind, could you please tell me why buy at a certain point? Thank you. So yeah, what I did, my bias was on the bullish side, on the bullish side. And when I chose this area right here, it was at the bottom of the value area. And that value area is that dark blue area of histogram bars that track one standard deviation worth of volume in the middle of this normal or kind of normal distribution, with the point of control being the most volume within that value area. So that was an area of interest to me. It was lower than the 23.6, which was only because we toggled. I would have tried to probably split the difference between the two at that point, but since we started late, I picked up on the bottom of the value area, point of interest, consistent with my bias, and my stop wasn't too far away, so I felt comfortable with that. But with that risk reward ratio, if you want to call it that. But I feel like we do have some pretty good area of support down here. So that's pretty much it. That was the reason. The CCI and the moving average cross didn't really influence me one way or the other. As a matter of fact, the CCI right now is minus 57, but the slope of the change of the CCI histograms down here, my oscillator isn't very steep, suggesting that momentum isn't very big. As long as right now we have a higher high from the previous candle, which is a positive thing, so I wouldn't move anything just yet. We're kind of approaching my rectangle again, my area of resistance. We'll see if we could penetrate that or not. If we can't penetrate that or not, then maybe we move our stop to break even and see what happens from there. But I'm not quite ready to make that decision yet. So again, I'm using my points of interest, and my points of interest in this particular case was the bottom of the value area, the fact that we established a pretty decent area of support here at the bottom with an equal and opposite candle that followed over this big negative red candle here, right? Almost a benchmark candle. I would say the benchmark is this candle here, 640 to 650, or maybe you wouldn't use the word benchmark, but dominant candle, right? And then we had an equal and opposite candle here, 940, which means it was the opposite direction, the same size pretty much than the previous one. And since it was so big, it was telling me, hey, there's market uncertainty now, but it's biased on the upside. So that's kind of, I know I just said a whole bunch of stuff in a short amount of time, but if you could get an opportunity to keep coming to these, I'll try to be more articulate as we get entries and exits. So right now our target is 92. The high of this particular candle so far was 91.5. So this is a really good example of market volatility and how it's hard to be exactly right? It's hard to be exactly right. We missed our target by 2 ticks, right? I could have easily made that a lower target, and it could change the dynamic of the trade completely, right? Maybe we will move our stop to break even and end up with a break even or worse. But I'm not gonna move it. I'm gonna stick to my guns here and say, okay, we're gonna get, since we have a higher high here, I expect another candle with the next candle to have another higher high, right? So this is we have a higher low, a higher low, a higher low, and then a higher high. That's a good thing so far for our trade idea. We'll see if it lasts. Again, I do expect the range to be slowed down. We're right at the point of control. We're trading right at the point of control right now. So we might not be a big day today. Ben, I am using at the bottom there, you can see that it's only a 6 handle difference between my fast moving average and my slow moving average all the way at the bottom, that blue line down here, that red line down here. That's the fast moving average is a simple moving average. It's the 6 period moving average. The slow moving average is the blue or purple or whatever color that is. That's a 26 period simple moving average. So it's 6 and 26. Nothing magical about that other than that's what I use. You know, I've experimented with 6 and 20, you know, with 10 and 26. And this is really this is one of the unique things about the way we're day trading futures is it's a unique experience. So whichever one you're comfortable with or you feel good with, you know, generate enough muscle memory to kind of lock that in and use that, right? You know, mine's not any better than yours. This is just kind of, you know, what I've used over the years and I'm comfortable with it. Ben says, I'm trying to use the MACD, RSI, and stochastics. You know, those are oscillators. And, you know, I'm always saying use whatever oscillator you feel comfortable with, right? For sure. And, you know, I don't know if you need to use 3 or 4 of them, but, you know, I like to use one. And this is my commodity channel index is the one that I like to use. We've used MACD before in these presentations. And, you know, they work just as well. It's just a matter of comfort and familiarity, really. But those are all good oscillators to think about. So Griffin says 8 and 18 simple moving average is what he uses on all 3 time frames. I'm just not sure if it matters much. So, all right, let's see. Let's get. We're going to have another bar here at 10:30. So we have 2 more minutes here, and that's going to be important. We have some sellers coming in our bar, slowing down our roll a little bit. We'll see how this ends. So far, I'm not particularly encouraged by having a small body on this candle, but I do expect some velocity to happen in about 1.5 minutes. At 10:30, remember, we have 30-minute bars that are closing, 15-minute bars that are closing, 10-minute bars that are closing, 5-minute bars that are closing, and all of that information is used by various traders around the world to develop trade strategies, to implement trade strategies. Algo systems, computer systems kick in when a new bar is closed because it provides new data that folks use in their algorithms and make their trading decisions with. So we'll see what happens here in a minute. Now this candle is turning red. There's a lot of sellers kicking in right here. So the fact that we missed our entry by 2 ticks is hurting right now. Doesn't feel good, but that's the way. I mean, that's just trading right now. We have a lower low now. We have another minute here to see what happens, and we have about 6 handle exposure on this trade right now. Oh, that noise was from the micros. I'm not going to worry about that one. So let's see what happens here. We got another minute. You know, velocity might shoot us down into my rectangle, stop us out. It might not. So my order flow, I'll show that in a second, Rodrigo, after we see what happens here in this next bar to see if we do in fact get stopped out. It's not looking good for our trade idea right now. You know, I didn't realize this, but we're 1, 2, 3, 4, 5 ticks below the low of the day on our stop. I usually like to give it 8, but there we go. Did you see it? 10:30, algo's kicked in, pick me off, and now we're back green. So we'll just kind of pay attention to it, see what happens here. So arguably on my notepad, I'm going to write down, you know, stop too close to the bottom. That's going to be what I'm going to write down on my notepad. As we analyze, and I think it's important, like after you're done, keep notes, look at them later on today or tomorrow, and it'll help you give you an idea of common mistakes. And I've been doing this for I don't know how many decades, but common mistakes, common things that happen. And right now I'm going to write this down. Stop was too tight. So in any event, order flow, how do I configure it? Let me show you real quick. The fact that we are down south here is not good. I would not try to actually buy a contract right now. Before I do that, let me adjust my rectangle. Bring it back down. And there we go. New area. Right click. I don't change much on my order flow volume profile. So the way I have it set up here, is just because it's a smaller range day. Ticks per level, I have it 2. Make sure that's on each tick. Calculate on each tick. Ticks per level 2. And the only other thing I changed was I clicked on the show volume labels. That's it. Apply and okay. Everything else, I mean, you can customize all this other stuff, but value area percent 68, keep that. That's up, 1 standard deviation, right? That's the value area. That's that dark blue. So we're going to keep that the way that is. And then, you could do widths and transparencies and all that stuff to make it visually appealing to your chart. And now look at that, another equal and opposite right back up. So as unhappy as I am that we did get stopped out, I'm happy that we learned a lesson. And that lesson was a good one. Super, super good one. Now, Griffin is making fun of me, and I deserve it. They're just running stops, and it's going right back up. LOL. I hear you. Today's action is a mess. Yeah. But we'll see here, because this is kind of setting up now. This is setting up now for actually a short opportunity, right? We'll see if we maintain. We're going to wait one more candle, one more bar here. We got 8 more minutes. But really what I'm interested in is, are we going to start establishing a series of lower highs, and then are we going to breach into the rectangle again? So that's what I'm kind of wondering right now as we watch this price action. But so far we've had 2 equal and opposites, right? We had this one at 9:30, and then we had the 9:40 bar, equal and opposite. And today, right now, previous bar where we got stopped out, and then the one that's trying to develop as we speak. Martin says, I got stopped out too, but it happens, so move on to the next trade. That's exactly right. That's a good philosophy for sure. So, but in my mind right now, I want to see another candle form. I want to see another bar. I'm glancing over at the quote board. I see gold is down 2, not that big a deal. I see the 30-year bonds down about 2/3 of a handle, or about $600 per contract. And typically what we've seen recently is these two things have kind of been correlated, right? Bonds and equities have been a little bit more positively correlated lately with this newfound volatility, but we'll see if that I cancel that. It's no longer good. We'll see if that holds or not. ES up $1.50, NQ down 17, Dow down 17, so relatively unchanged. M2K, Russell 2000 up 11. So everything is kind of hovering around a non-committal position for the equity market. So Chris, that's a great question. So Chris asked, hey, you were 2 ticks away from, basically what he's saying is you were 2 ticks away from your profit target. Why didn't you take it? Well, so I didn't move. I don't like to move my targets and my stops because in situations where price is teasing me, right? Came up with a plan. I felt that plan was deliberate. I felt the plan was solid. And when you start doing things like moving profit targets and moving stops because of FOMO, fear of missing out, it tends, in my experience, it tends to be a mistake, right? I didn't want to jump into the FOMO arena right there. The structure of the market still looked pretty good. I was hoping for another higher high in the next candle, which didn't happen. I thought it was a reasonable expectation. It didn't happen. And I was trying to be patient. So all of those factors kind of combined was why I didn't move my profit target right when we were getting close. I know the temptation was there, and it would have resulted in a successful trade, and we'd be a lot happier right now. But from a long-term trade management point of view, nothing really changed in my mind to merit a change. I had high expectations that we were going to get back into that rectangle and we were going to have a winner, and it didn't happen. So it was just part of, again, fear of missing out. I'm going to set that aside, stick with my game plan. Sometimes it's a good one, sometimes it's a bad one, and figure out what we did wrong. And we talked about maybe my stop was in the wrong spot, but now that I'm looking at this trade, I'm it's looking pretty negative right now, right? So maybe my stop was in the right spot, right? So I'm going to put a note there, a little asterisk here, and say maybe my stop was in the right spot. Let's see what happened, right? Because if this market continues to go down, we were better off getting out where we got out. Yeah, so Griffin's strategy is a good one too. Griffin likes he will trail his stop even along as the trade's going in the right direction to protect against what just happened. And that's not a bad strategy either, if that's your strategy. And what I would suggest is, if that's your strategy, make it your strategy, right? As opposed to my strategy where I'm going to wait. I have my, I want to wait for a candle structure change before I start changing anything, and be more patient. Griffin says, hey, I'm popping I'm moving my stop up to break even or some other, or trail it up along with your successful trade. And that way locking in something or protecting against something. So that's a pretty good strategy as well. I would just suggest, and this is my opinion, that you're consistent in that. If that's going to be your approach, that's going to be your approach. Cass says he has a bad case of FOMO. Is there a vaccine for that? I don't know, maybe, but you're gonna probably need a booster every morning. So my booster for my FOMO vaccine is a lot of cups of coffee in the morning. I find that helps a lot. Keeps me from going crazy. Anyway, 1038. I know. It's funny. All these studies are constantly coming out about, if you drink a lot of coffee, you're gonna live longer, or if you drink a lot of coffee, you're gonna die faster. No matter what study I read, it's like one way or the other. There's nothing in the middle. So I'm just enjoy it. So I'm gonna drink it. Chris says, coffee, the stronger the better. Hallelujah on that, brother. Anisha says, yes, it does. Griffin says, I'm wrong all the time, but I'm working small. One has to do what works for them. Now we're kind of, this is kind of a negative setup right now. Let me tell you why I think that. Let's just look at the candle structure. We have 1, 2, 3, 4, 5 candles in a row with big wicks on the top of the candles. Big wicks relative to the size of the body on candle 1, big wicks relative to the size of the body on candle 2, big wicks on candle 3, big wick on candle 4, and they're all at the top. These are sellers coming in, pushing price down. Sellers denying appreciation. Sellers pushing this stuff down. This is a little bit bearish right now. So we're in a bearish situation right here. For the sellers in the room right now. Let me make sure my fib line is in the right spot. Hang on a second. Let me get my crosshairs out because my eyes are failing at my age. And the sellers in the room, there's a couple of areas of interest, right? And this kind of goes to the question that we talked about earlier when someone asked, what was my decision to get in? We have the bottom of the value area of interest right here at 63. We have the 23.6% retracement, 85. We have the point of control, 68. These are 1, 2, 3 areas of what I'm going to call interest right now. And I would use those as guidelines and say, okay, these are areas in which perhaps I would like to probably try to get short right now. If I had a bias inclination to do so. And what I would do from a more aggressive point of view is I'd try to place a limit order here somewhere smack dab between bottom of the value area and then the 23.6 and it would look like this. If I was less aggressive, then I would wait to see if we can get some trade lift and get between the point of control and the 38.2. So this is less aggressive. This limit order would be less aggressive. This limit order would be more aggressive. And that's how I would use those areas of interest to enter right now. And since we're having a series of lower lows here, lower highs on the candle, I would suggest that this trade idea could be a good one. So we'll just see what happens here with this candle as we go forward here. The other stock indices are kind of not doing anything. So it's going to be a slow grind. And if you're looking at a slow, hey, I don't mind being in a trade for all day, as an example, then the conservative trade idea is a good one. Just wait it out. Wait. Just like it says on the traffic sign. Facebook Rodrigo says at 89.75, 147 sell contracts appear. Okay. I know it's going to be different by the time I freeze my dome, but maybe that pushes down, but wasn't enough to break support level. Yeah, so what Rodrigo is saying is, hey, I like to look at the volume and the depth here. I want to see how many offers are at various price levels on the sell side. I want to see how many bids are at various price levels and kind of visualize maybe supply and demand from that point of view. I was never very good at that. I'm not suggesting it's not a bad technique, but I just was not very good at that. And I hear what you're saying, though. I hear what you're saying. And, the other thing that goes through my head is on those bids and offers, Rodrigo, is they move around a lot. People are adding to them. They're canceling orders, cancel replacing orders, adding orders. And that causes that whole, you can see them moving around like crazy, right? This popcorn effect, I'll call it. We're right up against the lows today. Marcus says, T, what is T? Camille, is it Camille T is for me? Oh my goodness. I can't comment on that. I cannot comment on that. Coffee, espresso, maybe cappuccino. Griffin says, well, let me start off further up now. Let's go further up on my question board here. Griffin says, the market never has to prove me wrong. If it doesn't prove me right, I'm out. Ben says, FDA now is asking for 75 years for Pfizer vax info released to the public. 75 years. I'm not going to make it 7 years. I'll be dead in 7 years. 75? Martin says, absolutely. It's all in the risk management of where the trade is taken. Ben says, I'm wrong 2 times so far today. So that actually, well, hang on. Let me read the rest of the comments before I talked to Ben about that. Griffin says, I was wrong twice and right once, but I'm a couple points up. Unless something changes, I'm also done for the day. Okay, so the idea, the number of trades. Someone asked me once, how many trades should I do in a day? And my answer is, how many trade setups are there in a day? Every day is different. Every market's different. And, if there's not a trade setup that clicks with you, that gives you that aha, this is consistent with everything I'm looking for in a trade. It's kind of like dating, right? It's kind of like dating. This person has everything I'm interested in. Then you take the trade. If and there might be 1 a day, there might be 10 a day. I don't know. But I think the idea that, hey, I'm wrong 5 times, right 3 times. I want to be right 5 times, wrong 3 times. It's gonna change day to day. It's gonna be different day to day. for sure. So trade the structure, don't trade the money right now. The structure here is negative. We have our second lower high forming right now on this contemporary bar. It's 1046. The bottom here, my rectangle's holding though. My new area, I should say, my new area of support is holding right now. And we'll see what happens here as we go forward. Would not be interested in buying this low right here. I just think that it's the structure is relatively negative right now. CCI is minus 155, which is pretty minus. It's pretty negative, although it's been kind of sideways. So from a slope point of view, let me show you what I'm talking about. So the slope of the CCI is kind of consistent, right? But it's minus 158. That's to be respected. Moving average cross, we crossed under, the fast crossed under the slow, and it is diverging. Also negative, also bearish right now. So wouldn't be interested in buying something right now. So Hans says, great comment. Isn't overtrading one of the biggest mistakes traders make? So I would put an asterisk next to that. I would say, yeah, it's a problem, but it's overtrading when you're revenge trading, when you can't get past your confirmation bias or your belief perseverance or one of the other biases you have in your head, where you keep thinking you're right, but the market's wrong. Right? Market's never wrong. Market, no one's bigger than the market. I don't care who. Maybe the Fed could kind of slow the market a little bit, but other than that, nobody, no group, no institution, nobody's bigger than it. The market does. This is a cumulative battle between buyers and sellers, right? A collective battle between buyers and sellers, and it's once your biases start getting involved, or you start revenge trading or trading for the money, then I think that's when things break down and people tend to trade too much, right? And I was a broker for many years, right? And that's, we loved it, right? Hey, brokers love it when people overtrade. Are you paying all those commissions? No, that's false. We'd rather have you succeed over a long period of time and be with us many years. So Hans, that's a great comment. And I think a lot has to do with this idea that, what goes through our head, right? So right now in this presentation, as an example, I have some feelings of revenge, right? Our realized P&L is minus $335, right? I would like that to be positive. I would like to impress you that I could be positive every day, and I would like to show off my skills or lack thereof. And so I would like to get in another trade and try to do well, but the structure isn't there. So I'm going to sit in my hands right now and just kind of leave things alone as they are. Let's see. So Martin says, if you want confidence in your trade setup, back test when you have at least 100 BTs, their forward test before going live. Yeah, I would add to that, Martin, the idea that trading the micros it's a really good, if you're thinking about a sports analogy, if you play in the minor leagues for a little bit, even though I think you could be very successful with the micros, play in the minor leagues, get your mental capacity right as you're developing your system. Once you get through the simulation process, and then that's a good pathway to take for a lot of folks. Griffin says, if I take 20 trades trying to get even, it's a problem. If I take 20 trades because of pullbacks, it's a great trend. Then no, right, exactly my point. Structure, everything, revenge trading, bad. Well, Juan, so in reality, the more success everybody has, the better it is for everybody, for sure. We don't want people, quitting because not because it's not for them, but quitting because of common mistakes that we've all witnessed that we could overcome, right? We could set those aside. We could say, this is how how I'm going to handle this in the future. And I think it's good. But in any event, Griffin needs more letters. 26 is not enough. Oh my God. So Kaz says, the trick is to separate emotional hit from each trade, good or bad. Yeah, it's hard to do though. Man, is it hard to do, but you're right. Carlos says the VIX is indeed the holy grail at times. It tested the 35 level for the first time since February 2021. The time to buy long everything. I got to digest that comment. I don't know. I don't. Do I even have the VIX on my quote board here? 2183 right now, lower right on my quote board. Kaz thinks like a golfer. Have a short-term memory. Kaz's response is, I think like an elephant. I never forget. Ask my wife. Oh my goodness. Griffin has experimented with 200 character limit in chat. Were you typing some paragraph and then all of a sudden it stopped letting you and you counted those? Or is this a commonly known thing in YouTube? Maybe it is. I don't know. Oh my God. In any event, things are slowing down here. Volume, again, let's just look at the front month here. 691,000. Not a bad day, but not a huge day like we've seen before. So as the volume kind of dries up a little bit, I think that our daily, here's a daily in the MES. These bodies are going to be smaller. And previous to Omicron, it's hard to say that word, isn't it? Omicron. You want to say Omni, and you want to say Crom. Omnicron would have made more sense to me. Omicron Friday. I mean, look at the size of the bodies before that. They were reasonable. They weren't humongous for the most part. And I think we're going to start seeing that average daily range kind of dry up a little bit here. So keep that in mind as we go forward here. We're going to stick around for 4 more minutes here. My inclination at this point, well, let's see what happens with this candle before I tell you my inclination with this point. Let's just see what happens with this particular candle. And then we'll go from there. So 6 more minutes. We'll wait for another candle for 6 more minutes. In the meantime, remember, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a large combination of leverage and volatility, although that can be an equation for opportunity, also an equation for risk. So be careful, only fund your futures trading account with risk capital. Everyone's different and unique, be in a good spot. And then be patient is kind of another thing. I'm trading in a real-time sim account today with a real-time data feed, NinjaTrader trading platform. From Facebook, Andy says, Omicron. Omicron. I know, it's horrible. Anyway. Hans asks, during the US session, are there periods with lower volume, volatility, not so ideal for trading? Yeah, so that's a good observation, Hans, and you're exactly right. So you're going to see a cluster of volume at the cash open. You're going to see a cluster of volume at the close. And typically you'll see less volume on a relative basis between the two, right? So we're entering into a period now where you'll see less volume. It's 11 o'clock here, East Coast time in the US. So lunch is just a half an hour away. And as weird as that sounds, that does kind of influence things as well. Not to suggest that there aren't traders banging away anyway, But from a volume point of view, we could even add it if you want. We could even add that particular volume up, down. Let's add that. Okay. Let's see what that looks like on my chart. There they are. I mean, here you can see, here's pre-market open, big volume spike. Things are tapering down now. Things are tapering down now. And then you'll see another peak later on today. And then keep in mind midnight, 2 o'clock, when your X opens up in Frankfurt and when London opens up, you also see some spikes there as well. So great observation though. All right, so now we're wow. Well, good thing we had our stop in, right? Good thing we had our stop in. And it's best trade practices. Best practices. Get a stop in there, get a profit target in there. And if you do want to move stuff around, but be kind of there right now. At this point, no longer interested in this, no longer interested in that. And we'll wait 3 more minutes for this to change. So what's going to happen probably if we end up with this big red candle, so I'm going to again have to move my area support lower and wait for a few more bars before we can declare that we know where support is, because right now we don't. ES is only down 10, so in relative terms, that's not earth-shattering. NQ 37, RTY up 9, up 9.9, YM down 90. These are, it's not unchanged, but given where we've been lately, not a big deal yet. So Ken, yeah, so Griffin answered the question for me the way I'd answer it. Ken says, will you trade during last 2 weeks of this month around holidays? Griffin says, depends on market action. And I think that's right. I mean, I've been around long decades now, and we've seen some holidays where there was nothing going on whatsoever. And then we've seen other holidays where there was a lot of stuff going on. So it just depends, I think, on what's going on at that time frame. There's nothing wrong with taking a week off, though. Recharging your batteries, relaxing, spending time with family, thinking about what Christmas present to get me. Terrence, 1050 candle. Oh, okay, hang on. I'm missing all of these conversations on the right-hand side here. The doji at 1150 is scaring me away from a short trade. Yeah, that is a doji actually. Right here, this is what Terrence is referring to. In this case, I think this represents market uncertainty for sure. Dojis could represent either market uncertainty or market happiness. In this case, I think it is uncertain. It's uncertain, right? So in this 10-minute period, buyers and sellers were kind of, they ended up at the exact same price, right? The open price, the closed price was the exact same. We had wicks at the bottom, wicks at the top, about the same size, although the wick at the bottom was bigger. And then sure enough, the next candle, boom, we shot out here. We got another 30 seconds here. I just want to move my rectangle down. My fib line's no longer any good anymore. I have to keep moving that down. And there we have it. So until we find a little bit more support, we're not there yet. No support. In any event, all right, guys, a lot of fun today. I missed a lot of, there was a very active chat today. I missed a lot of the comments. I apologize for that. Carlos says our brain neural connectors failed. Martin's throwing in, I think the bottom is 4666. That's an ominous number, 466 and a quarter from yesterday's little dip before the close. Well, we'll see what happens going forward here. So everybody, thanks for coming. Appreciate the thumbs up on YouTube for sure. Terrence, thanks for being here. Chris, everybody, greatly appreciate it. And I do want to remind everybody, be safe out there and take care of each other. See you soon.